When it's come to dividend, where to show. When it's come to profit, where to show. When there is a reclassification, where to show. When there is a expected credit loss, how to show, where to show.
It can be monetary, even the company can collapse also. So we are going to look at some of the examples given in your study pack where the business was conducted unethically.
But student, SLFRS 9, lot of questions are coming and you might think it's a very difficult standard. It is not the case, student. So you can see there's a table that I have prepared by myself. In this table is the only thing that I required to teach you SLFRS 9. So in this kind of a situation, student, the lease payment is not 100,000. Since you are getting some kind of incentive, the lease payment is 100,000 minus 10,000, 90,000. That is why in the first point it says fixed consideration minus any lease incentive, or we can call scope increase in terms of underlying. So if this is the case, student, you are looking at this addition.
So accounting period need to end, terminate, terminus, but not co-terminus. That means co-terminus means what? It's not ending together. Non-co-terminus. So not ending together, no need to remember like that. Simple word is there, simple English, different accounting period. Non-co-terminus, if you accept is using that word for question, at least you should know. That is why I am putting, this is a good one. Okay, so that means what are the areas a group engagement team need to understand. That means those areas management need to ensure. Audit is going to understand, but management need to ensure. So Appendix 2 will tell me or will teach me as management
where we are having a separate standard for disclosures. Separate standard for disclosures. So that implied, student, how the financial instruments disclosures are important, and when it's come to an annual report of a company, how much of a disclosures that we have to make in terms of financial instrument. Annual report එක ළමයිනේ කොච්චරක් disclosures දාන්න වේද financial instrument. We are having a separate standard. So the amount of disclosures also very much high when it's come to financial instrument disclosure.
Or who is deciding what is right and what is wrong for the society? Very subjective discussion, right? Very subjective discussion. You would have seen in my ethical theory videos, there are a lot of theories, a lot of arguments. Some people say ethics must change time to time. So from place to place, that is called ethical relativism. And then some people say, no, ethics cannot be changed time to time. That is called ethical absolutism. And some people believe in consequences. Some people believe in action, right? Some people say, okay, you do the action, forget about the consequences.
We did expected credit losses. In that I have mentioned bank is given loan to customer. Can you remember the Mr. Paul? Customer. In that case, customer might not pay.
The company collapsed, lost a lot of jobs. Some of the officials went to jail also. Parmalat, Italian company and one of the biggest collapse in EU in 2003.
Revenue is recognized when OAS, the entity satisfied the performance obligation by transferring from its goods or services to customer. Each performance obligation is identified and entity must determine at contract inception whether it satisfies the performance obligation all the time or over the period of time or the point in time. Right. So here, student, revenue recognition. The revenue recognition need to be done when performance obligation satisfied. So standard says the revenue recognition need to be done when performance obligation satisfied. That is why this performance obligation identification itself given a huge prominence. In this process, if you haven't identified the performance obligation, distinct performance obligation in an accurate way, your revenue recognition is going to end up with a mess. So that is why the performance obligation identification is very much important.